Hey, it's Darius, and I'm on the CPA exam Facebook groups every day. And I love reading about when you pass and thank me for I-75. But what do you think's the most common question I answer every day? Which discipline should I take? And here's the answer. If you already passed reg and you enjoy entity tax, especially tax planning for entities, choose TCP. If not, but you already passed FAR and you like random calculations and formulas, then choose BAR, Business Analysis and Reporting. Otherwise, choose ISC, Information Systems and Controls, no calculations at all. Either way, I-75 will have you prepared for all parts of the CPA exam. Just go to i75cpareview.com. We always have a special, so go to i75cpareview.com, get yourself on the right road with me, Darius Clark, because the right teacher makes all the difference. All right, let's look at audit opinions, because an independent auditor can issue one of four types of opinions in an audit report on financial statements. The opinion reflects the auditor's assessment of the financial statement's conformity with generally accepted accounting principles and the overall fairness of financial statement presentation. Each type of opinion provides users of the financial statements with crucial information regarding the credibility and accuracy of the information presented by the entity's management. We'll start with the unqualified opinion. This is the best type of opinion an issuer can receive. So if you're a publicly traded company and you're getting audited and you receive an unqualified opinion, it means that your financial statements present your financial position, your results of operations and cash flows fairly in all material respects. An unqualified opinion indicates that the statements conform to GAAP and the auditor did not identify material misstatements. And that's good news for all the stakeholders. For a non-issuer, the unqualified opinion is referred to as an unmodified opinion, but means the same thing. That the financial statements present the entity's financial position, results of operations, and cash flows fairly in all material respects. So unqualified, unmodified, same thing. What about a qualified opinion? Well, a qualified opinion indicates that, except for certain issues identified by the auditor, the financial statements present the entity's financial status and operations fairly. The auditor might issue a qualified opinion if they encountered one or more areas in the financial statements that did not conform to GAAP, but those issues were not so significant as to necessitate a complete rejection of the financial statements as a whole. As we go from better to worse, we find an adverse opinion. That's pretty bad. That's where the auditor determines that the financial statements materially misrepresent the entity's financial position, results of operations, or cash flows, and therefore do not conform to GAAP. An adverse opinion is given when the misstatements identified are pervasive, meaning they affect multiple areas of the financial statements and are not confined to specific aspects. So if the misstatements are pervasive, then the auditor goes with the adverse opinion. If the misstatements are not pervasive, but instead they're confined to specific aspects, then qualified opinion is given. What about a disclaimer? Well, a disclaimer of opinion is issued when the auditor is unable to obtain sufficient appropriate audit evidence on which to base an opinion, and consequently the auditor does not express an opinion on the financial statements. So disclaimer is the opposite of giving an opinion. Disclaimer might occur for various reasons, such as significant limitations on the scope of the audit put on by the client, or uncertainties within the entity, or issues in obtaining reliable data to examine. So if the auditor just can't make up her mind if the financial statements are presented fairly or not because there's a lack of evidence, can't examine the evidence if it's not there. So the auditor didn't find anything wrong, it's just that there wasn't enough evidence to give an opinion, so we had no choice but to issue a disclaimer of opinion. So let's try this. If an entity's financial statements contain a material misstatement that the auditor believes does not affect the financial statements as a whole, which opinion is most appropriate? Unqualified, qualified, adverse, or disclaimer? And the answer is B, qualified opinion, because the key to this question was there is a material misstatement, but it does not affect the financial statements as a whole. So that's where a qualified opinion comes in. There's a material misstatement, it's significant, but it's not pervasive enough to affect the financial statements as a whole. This type of opinion indicates that, except for the effects of the area in which the material misstatement occurs, except for those effects, the financial statements are presented fairly in all material respects in accordance with the applicable framework, likely US GAAP. So B is correct. A is wrong. Unqualified opinion is not suitable here because that would indicate that the financial statements are free from material misstatements, and that's not the case. C is wrong. Adverse opinion is given when the financial statements contain material misstatements that are both material and pervasive, but it doesn't say that it's pervasive. Here it says the auditor believes it doesn't affect the financial statements as a whole, so that's why we're going with B. And D is wrong. Disclaimer, that's issued when the auditor cannot obtain sufficient appropriate audit evidence to even form an opinion. Not given when a specific material misstatement is identified, so we can't go with a disclaimer if we know there's a material misstatement. Let's go with B. All right, which type of audit opinion is rendered when the financial statements are found to be free of material misstatements and are in accordance with GAAP? Well, then we would go with what? Qualified? No. Adverse? No. Disclaimer? No way. Unqualified. Letter D is correct. An unqualified opinion is rendered when the auditor has determined that the financial statements are free of material misstatements and are presented fairly in all material respects in accordance with GAAP. This type of opinion suggests that the financial information is reliable and has been appropriately prepared and reported. Remember, the unqualified opinion, that's the best one. That's the clean opinion, the gold standard. That's the one the client wants. A is wrong. Qualified is for financial statements that contain material misstatements but are not pervasive. B is wrong. Adverse is for financial statements that contain material misstatements and are pervasive. And C is wrong. A disclaimer, that's only issued when the auditor is unable to obtain sufficient appropriate audit evidence on which to base an opinion. So letter D is correct. All right, if an auditor issues an adverse opinion, what does this indicate about the financial statements? And if you think you know, leave me the answer in the comments section. And remember to like and subscribe because it really helps the channel out a lot. And if you need more help with opinions or any part of the exam, go to I-75CPAReview.com. Get yourself on I-75 with me, Darius Clark, because the right teacher makes all the difference.